Hi, this is Pat with Energy Solution Partners sharing with you our energy market view on Saturday, August 2nd. Always keep in mind there is a risk of loss when trading commodity futures and options. Well, I wanted to take a little time today and kind of review the energy market here over the past couple weeks and the selling that has taken place. And typically when I put our market views together, I like to look forward and maybe pick out some ideas moving forward on where we anticipate things might go. And I don't like to look backwards because that is all history. But I think it's important that we do look back at the selling that we've had the last couple weeks here and just try to figure out what exactly has taken place. As we look at our supply picture, the first slide here is the gasoline supply picture. Over on the left-hand side, you can see we've been sitting right in the middle of the 5-year average range as far as gasoline supplies have gone, so it hasn't changed a whole lot. I think it's been pretty well balanced, so not a lot of activity on the supply side of things. But if we look over on the right-hand side, what the futures market has done in this gas market, we've watched this thing slide from the peak here in early June to the end of Friday's trade, over 40 cents a gallon. So as we look at a 40-cent drop and look at our supply picture, does it justify a 40-cent drop? It sure doesn't appear like it to me. And so again, looking at some outside factors, I think that are kind of driving the market. Same scenario on the diesel supply picture. If we look, we've actually been well below the 5-year average for most of 2014. But tracking real similar to year-ago levels on distillate products. And I don't think there's been a big concern about the supply side as the refineries have been hammering away, keeping up. But looking at price action again on the right-hand side, we've seen the diesel price slide about 20 cents a gallon since early June. Not quite as steep as what the gas market has done, but still a 20-cent slide. Probably not warranted with the supply picture that we've seen. So we've got a lot of outside factors taking place here. And I don't think you have to look too much further than what the U.S. Stock market or equities have done along with world markets. So fear has come back in. There's been some hiccups in Europe again and a default in Argentina. So a lot of outside factors coming in. And I think it's just created a lot of fear in the market. And as the fear comes in, people take risk off the table. And I don't think we have to look too much further than what's been going on with this speculative community and the money flowing in and out of these commodities. Here's a chart of that speculative money, what's been going on. This Commitment of Traders report comes from the CFTC. The red line is 2014, and this first slide is on the RBOB futures contract, what the speculators have been doing with their money there. And as typical during the summer months, we do watch these speculators carry a long position on the gasoline contract here. But look what's taken place here since early June. You can see that long position has been declining. We're down to about 31,000 contracts long today. And this report that's put out by the CFTC is as of Tuesday, the 29th. They release this on Friday. So when we get it on Friday, it's already dated a little bit. So the selling that's taken place in this window does not include the big amount of selling that we've seen on Thursday and Friday this past week. So when we do get next week's Commitment of Traders report, we'll likely see that they liquidated even more of their long position here. But if we put this into perspective, what these funds have done over the past 4 weeks on that RBOB contract, they have sold 35,000 contracts. And that 35,000 contracts may not sound like a lot, but each contract is the equivalent of 42,000 gallons. So over the past 4 weeks, the speculative community has sold the equivalent of 1.47 billion gallons of gasoline, and that's billion with a B. So a huge amount of selling in a short time. And I think that's a big part of what we've seen with the sell-off in that futures contract is these speculators are in there selling hard. They're pushing that market down. as they do get closer to the bottom here, it does probably mean a lot of money sitting on the sidelines and waiting to come back into work. Again, where we're at today is not unprecedented. If we look back at the purple line here, was with last year and how this speculative community handled their money. And same thing, they had a big sell-off. We peaked the market in February. They sold all the way into June. But then from June going forward, they did step back in and started buying. And if we look back to 2013 price action in that time, from July 1st through July 20th, which is going to be this round of buying right here, the RBOB futures contract went up 40 cents a gallon in that short period. So as the speculators move, they can really move this market. This little round of selling here then, the futures dropped 30 cents a gallon, and then we turned around, and through the end of August it bounced back up another 25 cents from that point. So as the speculative money is moving in and out of these markets, it can really move the prices here, and so we need to be aware of where that's going. If we look at the diesel side of it, then kind of the same picture. Look what's happened here since June. The selling that's taken place, they went from being long 40,000 contracts to Friday's report here. They were actually in a short position of 7,000 contracts, meaning there's more speculators placing their bets that the market's going to go lower than it is higher. And being in a short position again isn't unprecedented. We can look at last year where they did hold a short position as well, but it was just a matter of time until that money came back in and went to the long side. What we've seen looking back at years of history, they don't like to stay short for very long, and typically once it does go short, it creates a buying opportunity somewhere along the line. If we look at this round of selling this year on the diesel side again, the net long position has dropped by 46,000 contracts. We went from 40,000 long to 7,000 short. So that drop would be the equivalent of 1.93 billion gallons that was sold in the last 4 weeks. So again, that's 1.9 billion with a B. So just a huge amount of gallons being sold in the paper market here. Again, looking back to year ago levels, what happened after the funds got in the short position, they turned around, became buyers, and in this window that these funds were buying, they moved this heating oil market up 35 cents a gallon. So again, a lot of money looks to be sitting on the sidelines. Again, on this diesel report, same thing. It does not include the selling activity we've seen Thursday and Friday this past week, so we've probably seen a lot more selling come into place, and we'll have to look at next Friday's report to see where they're at. But I would guess they're sitting in a short position, and a lot of money sitting on the sidelines waiting to come to work. We just need to figure out when that money does come in and what is the driver. But as mentioned, a lot of fear in this market, a lot of people not wanting to put their money at risk here, so the money's sitting on the sidelines. Probably see a lot more choppiness here, and just wait it out. But when it does come back in, it can really move these markets. With that, I do continue to like the option market. Options are fairly cheap. We have seen a little bit of volatility come back into play here with this big movement, so options have gone up a little bit in value. But we can still see some decent option opportunities that we can put in play for 4 to 5 cents a gallon. And when we see these 30 and 40 cent swings as the speculative money comes in and out, that 4 to 5 cent premium on the options, I think, is some pretty reasonable insurance. And especially as this market has dropped, it looks to be very oversold at this point. Just a matter of waiting it out and see when the fear subsides here, and we can move this thing higher. So if you want to talk about some of these strategies, feel free to give us a call. Like to go over it with you. Again, the market doesn't have to bounce back from here. With the fear that is in play, there's definitely the possibility we could continue lower here before we do go higher. So the options are a great strategy, knowing the maximum amount that you're going to put at risk. So give us a call. We'd love to go over strategies with you. Thanks for listening.